Today we want to look at the four buckets that we have always talked about. We got the euro, the dollar, we got the yen, and we got the renminbi. Now, the reason that these four are what the major asset managers look at is because these markets are big enough, deep enough that when you make a move into them, you normally don't either drive the prices up or drive them down if you're moving out, okay? Asset managers, not people like you and I. We're talking about people who have real money, billions upon billions to invest. They look at the markets different than you and I. They say, where are the buckets that I can go to and it makes sense? Because remember the first rule of money. Money goes where it's best treated, all right? And so where do the money think that they're being best treated today? Now, we've all seen this on this channel multiple times. So the number one thing that people look at, of course, is the base currency in each of the four buckets. And the base currencies decisions are normally made on how are they economically growing. And as you can see here, the number one has been the United States. And if you look last year, 2024, I think it ended up that 74 cents of every dollar invested in the world was invested in the United States, and most of it in our Magnificent Seven, which were valued, overvalued in many people's eyes, tremendously overvalued. And so this is how people look at the world today. Now, we've just seen a money flow from American tech stocks over to the Chinese tech stocks. And when you look at what was going on there, we were incredibly overvalued. There's no way else. I mean, I know AI is big, it's going to be big, blah, 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 but that doesn't take into account. We were incredibly overvalued and still are, in my mind. First, the dollar and renminbi. The renminbi is going down. This is up here, but down in our world, in the real world. And this is because when Trump got elected, and you can almost see there, that's when it started in November. And because, Trump ran on, and he certainly is being very aggressive with putting on tariffs. But when you looked at the stocks, so this is the Invesco ETF, but it's compared against the U.S. tech sector. And what this is showing is that right before DeepSeek was announced, it was at an all-time low. In fact, look at the correlation. It was zero. Everyone's like, America 100%, China 0%. Then DeepSeek is announced. And for the first time, we saw flows leave. You saw NVIDIA and some of our other stocks. Not because they're bad, because people are now questioning the valuation. So now you're an asset manager. You question the American valuation and you say, where should I go? Should I go to Europe? I don't think so. We're going to talk about that in a minute. Do you go to Japan? Nothing really going on there just yet. But China just came out with DeepSeek, and look at the valuation of those stocks. So there is a move into the Chinese tech stock. So here's one ETF on the Invesco, on the Golden Dragon, okay? You can see the move there, right up after DeepSeek. Here's the MSCI China Tech ETF. As you can see, it went from basically, about 370 up to 458. Great percentage move. It's a small ETF, but it gives you the idea that the money decided they were going to take some of their cash out of the American tech sector, and they had to make up their mind where they're going to invest. They invested in the Chinese tech sector. Now here's the yen on a 5-year. As you can see, it's really since about 2020 has been moving down. They didn't have the economic growth, and we just saw that with the GDP. And so people tended to go into the dollar and not into the Japanese yen. Now, the Japanese yen made a big move last week. It went down 2 points, which is up on the open market. And this is very interesting to me. Here's the Japanese 10-year Treasury. So remember, they just took their short rates from a quarter to 50 basis points. Their inflation rate is like 3.4%. Their long bond hit 138, it's 136 as of this morning. And I would say there's very few people in Japan who don't believe that this is going to be 2% by the end of the year, okay? And this is going to have huge implications, I believe, for the yen carry trade because I think that the yen, I've been negative on the yen. I thought it was going to go to 170, but we're going to talk why. And if you watched my last video on what I think Trump is trying to do with the tariffs, and the number, if not so much the tariffs, he wants to devalue the dollar. So if we let the dollar go based on economics, I think it goes up, Japanese yen goes down, and the euro goes down. But if we are trying to drive down our currency, that may not be the case anymore. So we have to watch that. It's a data point we have to watch. So one, you got the yields going up, it's going to attract people to buy it. And two, the United States wants to have their currency go down. Now let's look at the euro. And I want to go back there to where that dip is, and then you look across. Basically, this thing's been, let's say, 105, but it's trading between 105 and 114, 15, we'll say, it doesn't matter. But notice how it's staying in there, okay? It's not, look at the steep decline on the other side. It's not been doing that, okay? It's been pretty steady. It's steady to almost to the downside, but steady. But here's the rub. This is data from SWIFT. This is where countries, regions, what currency do they purchase their goods in? How do they settle their trades? That's what this is, all right? So you see the renminbi on the bottom there? It's 3%. No one uses the renminbi. The renminbi is being used by China with Mongolia. That's basically it, okay? But look at the dollar. The dollar is at an all-time high for taking a percent of the global transactions that were done. But look at the euro. We're at an all-time high because starting back in 2022, late 22, for whatever reason, the money in the world has decided that they're not going to be transacting as much as they did in the euro. And the euro has been used less and less and less. Now, this is hedging your risk. Whatever the asset managers, whatever the countries see in euro, they don't like it. And we're at an all-time high only because the euro has given up their transactions, and it looks like we've captured a lot of it, but not all of it, all right? So the euro, when you look at the euro and you say, well, look at the price, it's been 105 to 110, it's been hanging in there and so forth and so on, but when you look underneath the covers, what do you see? You see that it's being used less and less and less in international transactions. I think that the euro could really take it on the chin here. Because it's just not being used anymore. And then you have to ask yourself a question. If you're not going to use the euro and the dollar's at an all-time high, the renminbi is in a closed system, what do you buy? I think they're going to buy the yen. Yes, they're going to buy the yen. A big, deep market. Interest rates are going up. You can capture that move there. And now, what's the negative to that, to the Japanese? Well, we have the yen, the whole world, we have the yen carry trade. And if this goes up to 2% and the yen then rallies to, let's say, 140 to 144, where it broke the last time, we could see some major selling across the world as the yen carry trade is unwound. So many things are happening right now. People are reevaluating where they're going for the long term. So what do you think? Tell me in the comments and like and follow.